Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of August 1st, 2016. And what's going on in the market? Absolutely nothing. I was on vacation all last week, riding my motorcycle up through uh, British Columbia and Alberta and down through Glacier. It was a great trip, and it was a good time to be gone because the market, again, did absolutely nothing. This is a really unusual pattern for the market. You can see where my cursor is. For the last couple of weeks, it's just been absolutely flat, trading in a very narrow channel, and we'll zoom down. But if you look back over 2016, 2015, even last year when the market didn't have any clear direction, at least it was moving, up and down a little bit. But as we just scroll back through the last couple years on the S&P 500, you don't find a period like the last couple weeks. It is really, really, really unusual. Let's drill down onto a 60-minute chart and just look at this a little closer. So here we are in a 60-minute chart, and you can just see, I'll just draw a couple horizontal lines here that define really the upper and lower boundaries of where the market's been really since back here, the 13th of July. And boy, it's just gone nowhere. It's in a really, really tight range. It's less than 20 points on the S&P 500. Now, if this was a person, we would be reaching for the AED and wanting to shock some life into it. But it's not a person, and there probably will be some kind of shock, good or bad, that will bring this market back to life. This is the economic calendar from last week. It was a really heavy week for news. A lot of news came out. On Wednesday, the FOMC came out and said nothing again. So there's that. And then probably the biggest news was GDP. On Friday, GDP came out. The consensus was that there would be a 2.6% growth, and it was less than half of that, 1.2%. That's a big deal for GDP, but it didn't really move the market. Let's take a look at next week real quick. So here's the economic reports coming out for the week of August 1st. We've got the ISM Manufacturing Index on Monday, personal income outlays on Tuesday, and then it gets all about jobs. So Wednesday's ADP report, Gallup job report, then a big deal jobless claims, and the employment situation on Thursday and Friday respectively. And I think those are going to I think it's going to be all about jobs next week, and that may be a shock that moves the market and brings it to some life. And if it's good news, maybe it'll be going up again. I don't think any new highs are going to be that extraordinary or impressive. If there is a negative shock, the market really is kind of poised to pull back, even if this isn't the big one. In terms of a major correction starting, the probability, the likelihood is, at least for a small pullback from this big move, this big post-Brexit move, and just a normal pullback from that would take us down here to about 2120 to 2080. This is a Fibonacci retracement zone, 38.2 to 61.8. That's the high probability, and we'll be watching for it, but it has not proven it yet. It's still in this channel. If this happens, it's very tradable. This is really, really hard for a trend or swing trader to trade, to make money in, but it won't stay there forever. It will break out, and it could go higher. If it does, it won't be much, and if it goes lower, it could come down to this range. That's a high probability, and at some point the big correction will get started, and we'll be ready for that. So we continue to wait and see, and let's see how these economic reports come out this week and what kind of reaction there is in the market. Meanwhile, let's take a look at gold and oil, as we always do. So here's the gold futures daily chart. We've been updating this for months, and as we talked about before, gold clearly in an uptrend all year long, a recovery from the multi-year down, and we had established a target zone up here between 1359 to 1454 for gold, it went into that target zone just briefly, pulled back a little bit, but now it's heading up. And so we could, end up still up here somewhere. A little late to be getting long on gold, but if, for any existing positions in gold and gold related trades, I would definitely be staying with it until this trend proves that it's over. So this continues, and it's, it's bullish. It's heading up, and it's been in the target zone, and it may go higher into that target zone. Let's look at oil. Oil is really interesting. Massive multi-year down move, and we had said the recovery was starting back here at 37.09, and it's gone up. This is a pretty big pullback. It's gone up pretty much according to what we thought it would do, and we said it was due and is showing signs of pulling back, and boy, it's been a pretty sharp pullback. We had said that the pullback range for this current move was between these two blue lines here, between 45.41 to 41.25, and it just went below that. And we got signs of a reversal, not proven yet, but we could have our reversal, and if so, then the next leg up could start, and it could be pretty impressive and take us up to the ultimate targets, which are low 60s to low 80s at this point. So really watching this very closely to see if we do get a reversal off this, and then we get the next leg up. That is not proven yet, so we got to keep waiting and watching for what's going to happen here, and I'll continue to provide updates for that. Well, that's it for the week. We need something to shock the overall market to life, to go up or down. Gold's still in a pretty strong uptrend, and oil pulling back, and we're looking for a reversal that is not proven yet. Well, stay tuned. Send questions and comments as always. I really like hearing from subscribers. I answer every question I get, and we will catch you next week. Thanks.